Today, we are digging deep into a true titan of industry, Caterpillar. And honestly, this company is a fascinating paradox right now. On one hand, it's absolutely smashing performance records, but on the other, it's staring down a potential storm of economic challenges. So, what's the real story for investors? Well, let's find out.
$67.6 billion. Just let that number sink in for a second. That's Caterpillar's record-breaking revenue for 2025. I mean, this is the highest revenue in the entire company's 100-year history. This isn't just a company that's doing well. This is a company operating at the absolute peak of its powers. And that's exactly what makes this whole situation so interesting. So here's how we're going to break it all down. First, we'll look at the unbelievable performance that's been driving the stock. Then we'll get into its core strengths and a really powerful new growth catalyst. After that, we'll run a full financial health check. We'll pit the bull case against the bear case, and then we'll land on our final definitive recommendation.
All right, let's get into it. First, let's build the bull case, and we're going to start with the incredible results that have sent Caterpillar's stock to brand new highs. $51 billion. Now, that is the number you need to focus on here, and it represents Caterpillar's year-end backlog. That's a 71% surge from just the year before. So why does this matter so much? Well, because a backlog isn't about past success. It's a huge flashing sign pointing to future demand. It tells us that Caterpillar's order books are stuffed, which, as CEO Joe Creed put it, gives the company strong momentum for what's ahead.
But what's really propping up all this success? Let's dissect what makes Caterpillar so dominant. We're going to look at the core strengths that act like a competitive shield, and then we're going to uncover a new catalyst that has the entire market buzzing.
You know, every legendary company has what investors call a moat, a competitive advantage that's almost impossible for anyone else to cross. Well, Caterpillar has a fortress. Its brand, Cat, is a global symbol of toughness. Its aftermarket services business is just a cash printing machine. But the real jewel in the crown? It's that global dealer network. Think of it like a worldwide army of sales and service pros that competitors can only dream of building. But look, a company that's been around for a century can't just rely on its history. It needs a modern growth story. And wow, has Caterpillar found an explosive one, the AI revolution. You see, its power and energy division has suddenly become a critical supplier for the massive data centers that power AI. These places have a crazy appetite for power, and Caterpillar's generator sets are the solution. I mean, just look at this, a recent massive 2-gigawatt order just to power a single AI campus. This isn't just some new market. For Caterpillar, this is a potential gold rush. So we've got a really compelling growth story. But a great story has to be backed up by solid numbers. So now, let's pop the hood, run a financial health check, and look at the 4 key metrics that tell us what's really going on. Okay, first up, revenue growth. In the fourth quarter, Caterpillar's revenue jumped by almost 18% compared to the same time last year. Now, this isn't just strong growth, this is accelerating demand. And the fact that it completely blew past what analysts were expecting, that's a powerful signal that the company's core business is absolutely firing on all cylinders. You know, to put it simply, just think of revenue growth as the speed of a car. A rate of nearly 18% means the driver is flooring it, and the company is picking up speed like crazy. Next, let's talk profit margin. For the full year, Caterpillar's adjusted operating profit margin came in at a really healthy 17.2%. This number is so critical because it proves 2 things. 1, the company has serious pricing power, and 2, it's running an incredibly efficient operation. Let's stick with our car analogy. If revenue is the speed, then profit margin is the fuel efficiency. For every dollar in sales or every gallon of gas, Caterpillar is keeping over 17 cents as pure profit. That is one efficient engine. But here's where the plot thickens a bit. This is the debt-to-equity ratio, and it's our first real red flag. At over 2, it's quite a bit higher than the industry average. What that means in simple terms is that Caterpillar is using more debt to fund its business, and that adds a significant dose of risk to the whole equation. And the risks don't stop there. This right here is a massive external threat, a projected $2.6 billion headwind from tariffs in 2026. This is not a rounding error. This is a direct attack on that impressive profitability we were just talking about. So with these storm clouds of debt and tariffs gathering, you might be wondering, what's the silver lining? What's the good news for investors? The answer is right here.
$9.5 billion. That is the mountain of free cash flow the company cranked out in 2025. We're talking about a massive pile of real, spendable cash.
Honestly, this might be the most important number for any investor. Free cash flow is basically the cash left in your wallet after you've paid all your monthly bills. It's the actual money the company can use to pay dividends, buy back its own stock, and invest in future growth, all the things that create value for shareholders.
So here we are. We're left with a classic Wall Street showdown, a powerful, exciting growth story on one side versus a wall of very significant risks on the other. And this brings us to the ultimate question: valuation. Is Caterpillar's stock price justified, or is it a bubble just waiting to pop? And this slide just lays out the conflict perfectly. The bulls, they're going to point to the record backlog, the new AI growth engine, and that massive cash flow. The bears, they're going to point right at the tariff problem, the high debt, and the risk of a slowdown. The crazy thing is, both sides have a really compelling case. And it's not just us weighing these two sides. The experts on Wall Street are just as split. Analyst price targets for the next 12 months are, well, they're all over the map, from a low of $420 to a high of over $700. This huge range is the perfect picture of just how uncertain the market is right now. The big question is still out there. Who's going to win, the bulls or the bears?
Okay, we've looked at the record-breaking performance, the incredible moat, the financial health, and that intense valuation debate. After weighing all the evidence, it is time for our final verdict.
So where do we land on Caterpillar? After weighing that powerful growth story against the very real risks, our recommendation is a buy.
We're issuing a 12-month price target of $640.20 per share. Now, this aligns pretty closely with the consensus on Wall Street, and we believe it's a price that really reflects the balance between Caterpillar's incredible growth potential and the risks that are definitely still out there.
So let's boil it all down. The number one reason we're bullish is that AI growth story. It's a total game changer for a company like Caterpillar. But, and this is a big but, you have to keep a very close eye on that tariff situation. It is the single biggest threat that could derail this entire growth story, even if the company keeps selling equipment at a record pace. You know, Caterpillar's journey is a really fascinating story of an industrial giant adapting to a whole new world of technology. It really makes you wonder, can these old-school industrial companies truly become the new darlings of the tech world? We want to hear what you think. Let us know which company you want us to put under the microscope next in the comments below. And hey, don't forget to subscribe for more deep dives.